Today I was asked to focus on some of the recent headlines about our sector. And, later in the morning, these are fields that some of the other speakers have already plowed. But my topic specifically is to ask whether improved communications might have helped avoid some of the problems, or insurance against what Brian Bloom referred to earlier as headline risk. And the headlines have not been particularly good. The starting point was, of course, the estimate by the Financial Times that a 21-word tweet by Hillary Clinton erased $40 billion off the value of pharma and biotech stocks on one single day. And the next day, she announced a plan to control drug prices. Now, you may argue that stock markets have a habit of overreacting, that traders sell first and ask questions later, that the pharma sector had been riding high this year and was due for a correction, that a new President Clinton, even if elected, would have difficulty passing healthcare legislation, and that this was just the type of politics needed these days to get the Democratic Party nomination. Indeed, the challenger candidate, Senator Bernie Sanders, is explicitly proud to count the pharma industry as one of his enemies. And recently, he rejected a donation from, yes, the CEO of Turing Pharmaceuticals, who he described as the poster boy for drug company greed. And yes, Mr. Shkreli has appeared on posters, all because of the increase to Daraprim. Now, Mr. Shkreli may well have reached notoriety not so much for the facts of the price increase to Daraprim as for the way he delivered his message, which we could describe as aggressive, profane, and not very effective. The furor died down a little when he promised to scale down the price rise, but it's still unclear where and when the price will settle and the matter festers. Now, how widespread is this issue? Certainly, it's possible to argue that Shkreli is a special case, but it was reported that Turing has just been kicked out of BIO, the US organization. Is that the end of it then? Well, perhaps not. Concern about price increases of specialty drugs in the US has rumbled for a while, and not every case ends the same way. One case was a massive increase 4 years ago on an old gout drug, colchicine, an increase linked to an FDA program to get unapproved drugs off the market. The way this works is that in return for running trials to show safety and efficacy, the company was given a period of patent exclusivity. Then, the company took a price increase to recoup their investment in the trials. This was controversial, but there are explainable cases. But last month, just after Ms. Clinton's tweet, Valiant Pharma was requested by a congressional committee to fend price increases on 2 older specialty heart drugs it had recently acquired. Initially, Valiant responded that it would change its strategy, spinning off the unit with older drugs to focus on more R&D intensive divisions. The communications didn't help, because it's important to be consistent, because more recently in Monday's teleconference, it's unclear that it will now seek to sell that unit. And the current attention, as we've heard, is on the relationship between Valiant and specialty pharmacies. That story came first from a short-selling hedge fund, which issues reports that can trigger the very selling frenzy that makes it money. But it's been followed by more credible sources, including the Wall Street Journal, suggesting that the specialty pharmacies run programs that can evade managed care restrictions. And those reports have certainly had their impacts. This chart is in US dollars, but you can see the hits in September, the first one, I think, from Hillary's tweet, the second one from the congressional subpoenas. And the last time I looked, it's currently at about $111 US. Now, Valiant, as we know, had an impressive run-up earlier in the year. It was once the company with the largest valuation traded on the TSX. And we've already said that markets overshoot, both on the way up and on the way down, particularly so for a company highly levered with debt. Now, there are some major investors who at current prices see value, and the Valiant story is still being written. But these two stories are dominating the media recently. One conclusion is that external communications are critical, too important just to be left to the trade associations. Every company needs to be able to explain and sell what it stands for, likely some mix of the industry principles of innovation, access, value, safety, the benefits to patients and health professionals who are our stakeholders. Of course, the industry's credibility is undermined by the outliers, often by companies that aren't members of the trade associations anyway. And the job the trade associations have isn't easy. Their members are independent, they're competing against each other for share. It's a problem not unlike the federal party leaders have, trying to orchestrate a clear message from their caucus members, but modern media, and particularly social media, demands constant and regular hits about the benefits to the pharma sector, the benefits from the pharma sector. The other side is taking shots daily. We have to be out there regularly with a strong story we can sell. Otherwise, what policymakers and voters hear are just the outliers. Now, of course, not all wounds are self-inflicted. A majority of Canadians voted last week for a party advocating something called National Pharmacare. These are words from the Liberal platform. Join with provincial and territorial governments to buy drugs in bulk, reducing the cost. Now, those are carefully written words. They may have more bite with respect to generic bulk purchasing. Certainly more public funding to provide access to medications can be a good thing, but it isn't just the US where there are threats on the landscape that need to be dealt with proactively. So finally, external communications may rarely be thought of as the engine of a pharma company, but communicating what your organization stands for is something firms need to do even before their products are ready for the marketing and sales teams. It's something of a higher order of importance. Obviously, there are good examples of that happening. We've had several CEOs this morning, but we need more. Too many companies, and I see this often in the US, have their investor relations group as the lead external relations function. There are stakeholders beyond shareholders, and as we heard earlier this morning, a firm without a strong relationship with their payers and customers may find themselves in a bad way. It's more than keeping the story clear and consistent or having a good media training coach, although particularly with Martin Shkreli, we've seen a remarkable example of bad technique. It's partly in integrating the external shareholder's perspective in business planning. How could we explain this? If we landed on the front page of the Globe or the Star, how could we respond, and how might that affect us? It's a perspective we could think of as an insurance to help prevent that headline risk. Thanks very much.